Good morning, staffers. Today we're going to talk about the last piece of our series of understanding staffing financial statements. And this is a piece that's often overlooked. But the thing is, if you're overlooking this piece, you really don't understand what's going on in the financial statements. And that piece is the footnotes in the financial statement, the very last part. And today we're going to dissect these financial statements and what it means for you. And we're going to dissect Adecco's financial statements and their footnotes to understand what that means for them and how you can take that knowledge and apply it to your business so that you can prepare your game plan for the future. So let's get started. Good morning, staffers. Today I'm so excited because we are going to talk about one of my most favorite parts in a financial statement, and that is the footnotes. And footnotes are so often overlooked because they're the back of the financial statements. Everyone thinks, okay, if I just look at the front and, some of the major statements like the balance sheet and income statement, I'll get everything I need. But really, there's so much juice in the detail on the footnotes of the statements. Before I begin, it's very important to me that you don't miss any of our training videos because I want to empower you and your business to succeed. So go ahead and look at the bottom corner of your screen, and there's a button that's called subscribe. Go ahead and click that subscribe button now so that you don't miss a beat and that you get all of our training videos so that you can have an awesome business. So staffers, today we're going to talk about the footnotes to financial statements. In particular, we're going to be analyzing Adecco's financial statements. So keep in mind, these statements are publicly available, so you can just go to their website and download it. And the statements are in millions because they are a very big company, so you have to kind of add some extra zeros. And they're most likely in euros too, just because they are European based too. And they'll tell you on each of the graphs exactly what currency the numbers are being placed in. But I love the footnotes. I love the footnotes because footnotes tell you the whole story. You can make a lot of assumptions when you're reading those financial statements, but the footnotes, what they do is they tell you what basis of accounting we're using, what assumptions are we making, and it allows you as a user or an investor to make wise decisions knowing all of the facts, right? And, it tells you about the estimates that they're making in the first section. They're doing these financial statements in accordance to US GAAP, so US generally accepted accounting principles. And that's important because there are different bases of accounting. I mean, you can do accounting financial statements on cash basis where you're only recognizing transactions as you pay things out, as you receive money in. And if it's accrued and it's a bill and it's not been paid yet, it might not even go in the financial statements. But here they're telling you that the financial statements are US GAAP. So when you compare statements to another company, let's say you want to compare them to accountants or something, you can make sure that they're also using US GAAP. And so you're able to compare apples to apples and making sure that your comparison is fair and that it really makes sense that you're making that comparison there. They're also telling you when do they recognize revenue, right? They're telling you that they recognize revenue when there is a sale of a temporary service or placement of a permanent employee, or they're selling career transition or other services. So that is when they are recognizing income, when they actually have now monies due to them. When they've earned that income, that's when they're saying that they are recognizing their income there. And there's a lot of really good definitions in terms of footnotes and what they mean here and what they're using for basis. They're telling you that, hey, when we're operating, we take advantage of all those tax credits that are available out there. So it looks like the French government offers a tax relief program called CICE, and they're going to use that. They're telling you, hey, we're taking advantage of all of our tax credits because we're trying to increase our cash flow and increase our income and pay less taxes too legally if there are credits available. And this is good for you too, as you're reading these financial statements and, it helps you know what is exactly available for you that you can use. Um, the the footnotes also tells you it provides here in a case a stratification of their service lines here. So they're telling you how much revenue do they bring in for their temporary services. And looks like for Adecco, that is their largest piece of their pie. They have $20 billion in sales that's related strictly to temporary services. And this is in euros, and it's been consistently like that through years. And in fact, their smallest division is their career transition division, which is only $335 million for them. Or even their career placement, that's actually kind of small too. It's only $567 million. So primary Adecco is a temporary staffing placement company. And you can see that from looking at the notes in the financial statements. And in terms of career transition, now this is something that's probably unique to Adecco, but it tells you exactly what career transition services are for them. So it looks like they offer multi-month career transition packages. So they're packages that they're offering to companies at a fixed rate, and they're able to provide these services to help their employees be able to find different lines of work. Here is what they're doing. And there's this other line of business that actually is pretty sizable. I mean, compared to, the traditional ones, it's $2.2 billion in revenue for them. And it tells you exactly what this is. This is their managed service program and their recruitment process outsourcing. So when they're um, serving as a recruiter for companies internally, this is what they're doing here for that. And it tells you what states that they operate this in. So there's a lot of juicy nuggets in the footnotes of the financial statements. Also in the footnotes, it's telling you acquisition details. So it's saying, hey, we've acquired some divisions, and it was mostly, honestly, human capital. We were buying their talent, their brains, their knowledge, their know-how. And in particular, we were buying this company, General Assembly Space, here for 316 million euro. And exactly, it was mostly goodwill is what we were purchasing it for. In addition, they acquired an interest in this company called BioBridge too, and they've acquired a company called Vettery here too for 77 million. So they're telling you, hey, we are growing. We have a strategy here. And it's not necessarily temporary services. We're looking at other lines of business. And I know in our MDA discussion, when we go through that, we're going to talk about exactly what these are and understand better what the strategy that Adecco is using. But these are just some things to pay attention to, things that are popping out in the financial statements that's telling you, hey, this is what Adecco is doing. This is what's coming through their pipeline. Are they in a line of business that maybe I should be looking at too and considering? Is there something in the future that I need to be watching out for to make sure that I stay competitive? There are other important details too, like how much receivables do they have outstanding at a given point, outstanding, and what is their stratification of equipment too? What are they owning here? It looks like they own very little of their land, but they own a lot of furniture and computers and software and that type of thing. So, really, what are their asset makeup? What is really making up a deco? What are they investing in, and what do they see as important so that we can make sure that we're meeting? I know you can see right here, it looks like their biggest investment is their software costs. They're investing in their technology because they realize that technology is going to make it easier for them to recruit. It's going to make it easier for their employees to place. And this is where they're really, really putting their money at, is their software. And we're going to talk about that more in detail in our MDNA video. So definitely check that out and watch that. It talks about financing arrangements and debt in their footnotes. And I thought this was really interesting. So, Adecco, you got to avoid those bank drafts. You can't keep having bank drafts because it's costing you money. And definitely, don't write bad checks. So, don't do that. This just talks about a little bit more of their compensation, their board of directors compensation here. And if you decide one day to get in that direction, it's always good to kind of compare what other companies are doing for that. Their retirement plan, it talks about their costs associated with their retirement plans here. So a lot of good, interesting things. I think another interesting thing that I saw in the Adecco financial statements was it shows their revenue by country. And you can see that France is obviously their largest operation here. They've got $5.7 billion in revenue coming from France, but the United States doesn't trail that far behind. It's $4.2 billion in sales there. And so again, you're seeing by performance of country, you really want to, us in the US, we want to watch Adecco because Adecco has a pretty large US market. And we want to find out what is coming up in the pipeline. So we want to watch that. Um, Something else that I found interesting was you can see the historical performance. You can see how they have grown throughout the years. And you can see, like, in the last 10 years, they've grown significantly. 10 years ago in 2009, they were only a $14.7 billion company. Today, they are a $23.8 billion company, or 22.9 if we round up. And, and their margins are growing too as a result of their sales. So definitely things to watch, things to look at, trends, and performance data, and it really shows you what is going on in Adecco. So, friends, do not think that you're done with the financial statements just because you finished the major tables. Go into the footnotes. There's so much juicy information in the footnotes. Do not pass up those footnotes because it is invaluable information. So I hope that today was helpful, and I look forward to seeing you again.